Hello and welcome to a special edition of Buy Africa, where we focus on investment opportunities around the continent. I'm Tsepo Modiba, and thanks for joining me. Tonight, I'm joined by Nima, Ramkhelawan-Bhana, and Celeste Fokana, Africa analyst at Rand Merchant Bank, for a closer look at the latest RMB Where to Invest in Africa report, which indicates that there's a treasure trove of opportunities that still exist on the continent. I like the positive stance on that. As the show's name goes, this is Buy Africa, so thank you, ladies, for joining us. Let's kick off with a broad theme of the continent. In terms of investments, certainly in the equity space over the last 24 months, it's probably been a little bit doom and gloom. Is it still the place to invest? Are we still positive overall? And then we can delve into the individual countries.
Sure. I think the publication is exactly that, to say that there is still opportunity. We highlight that we have to look at the past to be able to see what's going to happen in the future.
Right.
And that's exactly what the theme is of this document. We know that in the past, Africa has been doing well. In the current situation, it is different. We are sitting in a commodity price cycle that is not conducive to strong growth on the continent. Right. But of course, this is cyclical. So we just have to highlight to our clients that never fear, there is still a lot of opportunity available on the continent, not just from a growth perspective, but the sectors that are just exploding of growth around the continent.
Right. Nima, again, I guess the underlying long-term picture for sustainable growth on the continent remains, and the picture for investment then should remain.
I think we're starting to differentiate and get a clearer idea of what sustainable actually means.
Right.
Sustainable has in the past been akin to resources growth, and what we found in doing this publication, it being in its 6th edition, is that we've moved further along in terms of that evolution. We're now looking to differentiate between economies based on their economic structures. How far along have they progressed in terms of structural transformation and what that actually means? So from a long-term growth perspective, if we compare the continent to the likes of Southeast Asia, we're in very different cycles at the moment, but that doesn't mean there isn't an opportunity with the necessary structural reforms to be in a similar position in the next 20 to 30 odd years. But it is going to be a slow grind because you need the necessary political will to support that.
And does that political will exist?
It does. It's starting to. I think especially if we look at the operating environment across the continent, we're starting to see levels of governance improve, particularly in those economies that were previously masked by poor levels of, especially in terms of the ease of doing business. So we are seeing a very slow and measured change. And again, you have to look at economies individually, not look at Africa and paint it with one brush necessarily. And that's what we try to do within this book, is to look at economies according to very strict methodology, key pillars that balance both macroeconomics as well as the practicalities of doing business. By no means are we trying to excuse or ignore what's happening in the current realities. It's how do economies realign themselves and position themselves for the next 10 years.
What are the key attributes of, or I guess, that differentiate those countries that should do well going forward, and the ones that probably aren't going to do that great? What are the key attributes?
Well, diversification is key. So the past 10 years, resources were the main drivers for growth on the continent. And these governments have now been forced to look and see, okay, we really need to diversify now.
Right.
Because the commodity price cycle, even though prices are starting to elevate again, it's going to be at a very slow pace compared to what we've seen after the global financial crisis.
Right.
And these markets actually know that. And what Nima's been speaking about your business environment, opening up your environment for more investment, foreign investment to come in. We've seen that in certain countries, not in the whole of Africa, but for instance, a Côte d'Ivoire. We have seen in 2011, it came out of a political turmoil, and now it's one of the better business environments in West Africa.
Right.
Rwanda also, we know, has been the best performer when it comes to its business environment. If these countries can just work on opening up and reforming just simple things, coming in, starting a business. How many hours does it take or days does it take to ship your goods into these ports, etc.
Right.
Small things can make big changes.
So in a perverse way, has this pullback in commodity prices or this commodity crisis actually been a good thing for the continent?
Absolutely. I think it couldn't have come at a better time. Africa was growing at levels of above 7%, and in many cases at unsustainable levels. It was supported by a services-led growth framework, or primarily resources. And if you have to remove the demand for services, and if you have to remove the commodity price cycle, you have a missing gap. It's a lack of manufacturing on the continent. So basically what the resource price downturn did is reveal all these structural inefficiencies and force governments back to basics, having to look at basic infrastructure, for example, to support industrialization, so that you have a full value chain offering that can fit not only into regional trade, but also into global trade. So very definitely, and we see certain economies starting to pull away. Those economies that were less exposed or less vulnerable in terms of their export cycles or their general business cycles, particularly in East Africa, have of course sustained growth rates in excess of 4.5%, 5%. But we're starting to see your West African economies, the giants of Africa as you were, or as we call them in the last 5 years, starting to go through those structural changes, potential growth rates being paid back to 2 or 3% and living through those cycles so that in the next 10 years or so, they can be self-sustaining.
Okay, so we've spoken a little bit about, I guess, the positive factors that the economies are doing to assist them developing. What is the biggest constraint? What are the constraints that actually may render the outlook for the continent actually quite negative over the course of the next decade or so?
Sure. So we actually did an in-house survey of our clients, asking them what is your most problematic factor for doing business in Africa.
Right.
And the top ones were infrastructure, so obviously getting your goods in and out. Corruption was your second most problematic factor. And your first most problematic factor was access to financing. And this is not a surprise. We've seen it over the past decade already.
Right.
The World Economic Forum always hammers on it. And specifically, there's different areas to access to financing. How easy is it to get your money in? Can you get funding? But the problem is getting your money out. And this is because of pricing, it is because of exchange controls, it's because of liquidity in the markets. And this year in the publication, we focus on liquidity because we've seen in the past 2 years that's been a major issue. And obviously that stems from these countries being dependent on commodities because that's how they get their dollars into the market. I think Nima can touch a bit on how East Africa has been different from that because they at least don't have to or get exchange rates or rather hard currency from just one specific commodity.
Right.
But overall, our clients, we as a bank, I think anybody else who's busy in Africa can see that it's difficult now to actually get your dollars out of the market. Angola, a very prime example where your official and your parallel rate is about 300% apart.
Right.
Mozambique having their debt situation there where the IMF is not very happy with them. So now the funding and the donor funding is trickling off.
Right.
So that's the major problem for us now.
Nima, what can, I guess, African economies do to address this? And you touched a little bit on East Africa. What is East Africa actually doing right?
Well, I think in the markets, uncertainty breeds volatility, but it also breeds innovation.
Right.
So we've always looked to South Africa as the bastion in an African context in terms of financial market development. And what this provides, obviously, is an opportunity for economies to broaden their financial sector and specifically their offering. In many cases, if we have to look through international surveys, we find there's only a handful of countries within Africa as a whole that can offer comprehensive financial market solutions.
Right.
Access to financing across sub-Saharan Africa remains very problematic. With the proliferation of mobile money, it's obviously becoming easier, but we still need to see a convergence between technology and the financial market to further that proposition. I think what we're looking at is also participation. We not only have local skills, but I think what we're finding is international skills coming to the market, offering supervisory services to build up the financial sector. So in having these liquidity problems, which is not unique to one economy, we've seen it worldwide, just in gaining other experiences and trying to see how that can be adapted to the market, whether there is opportunity for hedging instruments, for example, in an FX context.
Right.
Can that be assigned to a particular sector? Can we create the two-way liquidity to support that? Are there the necessary market players? And I think it's fostering more engagement then between the private sector, financial market participants, as well as your monetary authorities. So we're seeing a lot more conversation happening at this point in time. Also in terms of regional blocks, we're starting to find a lot more uniformity between your regional blocks. The East African community has made many a stride in trying to condition their equities market. Moving a little bit further along, we do see disparities between a Kenyan fixed income market and a Tanzanian fixed income market, but through regional cooperation in the next 10 or 20 odd years, we might find quite a bit of synergy between the two. So as an investor, you could perhaps straddle between the two economies to try and mitigate your risk.
Right.
So I think this is part of that evolutionary process that we were talking about in the beginning.
So does that then mean that financial services businesses as an aggregate, but banks in particular, then are particularly well placed going forward to alleviate some of these stresses and hopefully profit?
I think you can't look at it in isolation. The proposition is different for mature economies where that would be the case, where you could support growth in your banking sector. But I think it's also the function of the business cycle.
Right.
The business cycle, as we know, is depressed. We've found that across sub-Saharan Africa, there is a tendency to use regulatory changes to bring about some type of stability within your economy.
Yeah.
And a more onerous regulatory environment makes it difficult for the financial industry to expand.
Right.
We also have international standards that most of Africa haven't adopted yet in terms of your Basel regulations, those only coming in 2019. So the landscape is changing. With the largest problem at the moment being liquidity, it obviously makes it more difficult to grow your loans book. Your NPL ratios are rising. So I think for the moment, you have to look at it in terms of a cycle, probably not within the next 3 or 5 years. But thereafter, it makes sense to have the ability to set up shop and expand in terms of a regional footprint, to be able to, again, access your different markets and take advantage of that demographic.
Okay, let's move the discussion along and start talking, I guess, individual countries. What's the top-ranked country around in terms of, I guess, the thesis on investments for the next decade or so?
So South Africa is still number one.
I'm excited as a South African, but what's the basis behind it?
We are also very happy it's still number one. If you look at the methodology we use, we look at market size in dollar terms, we look at your growth rates for the next few years, and we look at the business environment. Okay. Take growth out because we can see South Africa is not doing very well at the moment.
Right.
We are still very strong when it comes to the business environment. We are in the top 5 best business environments on the continent. And of course, we have one of the biggest markets. I know we're juggling between Egypt and for the second spot after Nigeria, but we still have those two aspects of the methodology that puts us in the number 1 spot. If you look at scoring wise, that growth rate is actually pulling us down.
Right.
So the score between Egypt and South Africa is definitely narrowing.
Right.
Now, your other countries that's in the top 10, we have your North African countries that are now in 2nd and 3rd place, Egypt and Morocco, but they've always been on a good footing over the past few years. Even though they went through the terrible turmoil of the Arab Spring, they recovered very quickly, implemented some reforms, and of course they remain the most diversified economies in the whole of Africa. Right. Not only do they have fuels, they've got agriculture, manufacturing, services, etc. Right. That's one thing Sub-Saharan Africa can really learn from the North African countries, and same with Morocco, one of the best financial sectors on the continent after South Africa.
Does geopolitical environment come into the picture at all? And on that basis, how does North Africa rank relative to the rest of the continent?
Sure. Absolutely, it does. It's part of the risk rating or ranking that we have in the part of the operating environment. So we look at terrorism, crime, ways of if you can't get your contracts through, etc. So all these type of political issues definitely built into the methodology. I would say if you have to compare South Africa to your North African countries, our political stability ranking is much better, because there's always that fear that something could go happen again in North Africa. However, this is an annual document. If something happens in Egypt a month ago, it won't reflect in our rankings. We will highlight that to our clients that something's happening and this might change our view of Egypt, but for now we keep Egypt there. But of course this document looks 10 years ahead. It doesn't look at what's happening now. That we've got other documents for. In the future, these countries, we do not expect another Arab Spring. We think they've reformed enough to be able to tackle these issues.
Okay. Let's move elsewhere in the continent. The former largest economy on the continent, Nigeria, where in the rankings does it fit in, and what's the outlook like for that economy?
So still within the top 10, so encouraging in that sense, especially if we have to consider the opportunities that most people were looking to take advantage of in the last 5 years or so. It was mainly around its size, its geographical positioning, its strength within West Africa as a whole. Now, over the last year and a half, we have seen a change in political dispensation. We've obviously seen oil prices decelerate sharply. And again, as we were talking about previously, that has exposed quite a number of these structural inefficiencies within the economy. We've seen a lack of policy coordination between your monetary policy authorities and your fiscal policy authorities. So we have an economy which was growing at 7% no less than 5 years ago, now in the depths of recession. So it's a matter of how do we now place the business cycle so that we can grow at a sustainable 3.5% in the next 2 or 3 odd years. So the outlook does seem quite dismal at the moment if you have to look at it from an economic growth standpoint, because as we mentioned, they're lacking a strong manufacturing industry. So quite a number of the reforms that they've enforced, which have been very onerous on the business environment, is around trying to expedite industrialization. And that, as we know, is again a slow-moving process. And you need basic pillars to support that. You need infrastructure, energy to support businesses on an ongoing basis, necessary logistics to just be able to transport your goods to and fro ports to the north of the country. It's a number of moving parts at the moment. You mentioned geopolitical risk, and we still have the threat of Boko Haram in the north, and we have a new threat in the south, in the Niger Delta, and that is obviously threatening one of the biggest aspects or forms of revenue for the country in terms of oil. So there's a number of issues which need to be looked at in isolation and then together in terms of Nigeria's development strategy over the next 10 or 20 odd years. I think that the current political dispensation has quite a tough 3 years ahead of them in order to put the economy on a firmer footing and for it to be more sustainable. One of the biggest aspects at the moment is foreign exchange. And just in terms of the change in the framework and how market participants have really struggled to adapt to that. And we've seen this advent and growth in this parallel market, and there being such a divergence between where your parallel market is trading relative to your official rate, how that difference is feeding into the real economy through inflation, really putting Nigerians on the back foot. And we have to overcome those obstacles before we have a better growth environment. But still, having said that, and just coming back to our methodology, we can't discount the opportunity. It's not a case for disinvestment from Nigeria. It's a case of strapping in and holding on tight. And if you have the necessary buffers in place and you have the margin growth that you can ride out the cycle, there will be opportunity for you at the end of a 3-year period.
The case remains that, you know, they've got a very large population that's fairly young, and an illustration of industries that have propped up. I mean, cement's a great example. Is there scope for reforms that helped create the likes of Dangote Cement coming through for other industries going forward?
I think we're starting to see it more at a lower level, so growth within your SMEs. So you're starting to build Nigerian businesses from the ground up and provide that necessary technical support. What we need to have is a platform where private sector can actually engage with the government and work together to grow industry. So I think we've seen pockets of growth in terms of the telecommunications industry, ICT, you've mentioned cement, so construction, but we need demand to support growth in those industries as well. And we also need complementary services to that. So I think in terms of manufacturing, there's been a number of reforms aligned to the development strategy that are being put in place at the moment to grow that value chain so that you can actually produce goods in Nigeria to support the likes of your services sector. So reduce the importation of necessity goods, make it cheaper for Nigerians to grow businesses, and also to make it more affordable to the population. But this is a very slow moving process. We talk about the operating environment, and again, it's the numbers of checks and balances in place. So we've got to simplify those types of processes, improve the institutional capacity within Nigeria. And once all those factors start to come together, we see a more holistic business.
That makes sense. Let's stay within the region. Ghana is fairly highly ranked in the survey. Why?
So it is actually number 4 in the survey. So it has been doing much better. Well, it's always been in the top 10, but it's been moving up the ranks. The reason for this is over the past 2 years, they've actually been really struggling. But on the back of that, if you again look towards the future, again, one of the easiest business environments in Africa. We have seen strong growth rates, above 7% because of the online of oil. And of course, then we look at they are starting to become quite a big market in West Africa. So that's why it's in the top 10. The reason why it is now in number 4, I think it's more that Nigeria is not doing so well, that Ghana has actually overtaken it. But Ghana's authorities have been really strict with the IMF program. They have been doing or adhering to everything the IMF has been saying. Yes, they've got an election coming up. Yes, there have been a few talks about whether the IMF program is still continuing. Our core view is that it will continue. They will get the new tranche coming in the 3rd quarter. So we're not concerned. With all of this, their currency stabilized. With this, their fiscal balance deficit came down. With this, their inflation is starting to come down, and we will probably see next year their policy rates come down. But in the end of the day, for business to go in there, it's much easier going into Ghana than in Nigeria, for instance, and that's what we are looking for.
Makes sense. Let's move regions, go from west to east. What are the East African players looking like, Nima?
Well, I think when you think East Africa, you think about the East African community first and foremost. So your primary players there are Kenya and Tanzania. And they've featured quite prominently in the last 2 or 3 years within our rankings. So it's, again, encouraging for us to see that they remain within the top. In fact, Kenya moving into the 5th position. So usurping Nigeria, now taking that spot. But we've also found that Ethiopia, for the last 2 years particularly, has again come through. So it's starting to compete with the likes of Kenya and Tanzania. And keep in mind that it isn't part of the EAC, so it can't necessarily leverage on those types of relationships. So we have to ask ourselves, what is that differentiating factor? What is it about Ethiopia, despite its regulatory environment, which in many cases is restrictive if we think about liquidity and just lack of access for foreign investment? What is it that makes it so appetizing for an investor? And again, if you think about levels of productivity within key sectors like agriculture, agri-processing, trade, manufacturing, high levels of productivity, low unit labor costs. So it competes with the likes of Kenya and Tanzania, and this has been their bread and butter for the last couple of years. So I think we're starting to find investors broaden their horizons within East Africa and look to Ethiopia. In the last 5 years or so, it was more around the agricultural produce and how fertile the lands were and the opportunities around that. But I think it's becoming far more diversified now. You have very strong government support for those particular projects. And in fact, one of the key elements for Ethiopia is the fact that they've invested quite substantially into improving hydropower. They want to become self-sustaining, in fact, in terms of electricity generation by 2020. So really trying to accelerate that growth, again, to support industry, and might well have the benefit of exporting that electricity to the rest of the region. In terms of Kenya and Tanzania, again, very different propositions, but very similar in terms of their levels of diversification around the economic structures. With the change in political dispensation in Tanzania, we've seen a strong drive towards industrialization, and we keep on harping on the same words: industrialization, transformation, but these are the types of aspects that are setting East Africa apart at the moment. The reason why Kenya continues to stride ahead is, again, it's a little bit more of a sophisticated business model, but where they've really put a lot of money into over the last 2 years is infrastructure build. Right. They realize that they can't compete with the likes of Tanzania or Uganda or even a Mozambique in terms of natural resources. There are oil prospects, but it's the quality of oil that doesn't necessarily hold against their counterparts. But they are a conduit for the movement of goods in East Africa. So they've really built their capacity, roads, rails, ports expansion, to allow themselves to remain relevant in the East African context.
I guess the obvious question is, where's Rwanda in this mix? Where does it sit in terms of relative rankings?
So it actually fell out of the top 10.
Oh, yeah.
Unfortunately.
That's very disappointing.
Yes.
Even in spite of the high growth rates?
In spite of it, but it's not because of the performance of Rwanda. It's because of the other countries that have actually done better this year,
right,
from last year's scoring.
Right.
So it's nothing we should be worried about Rwanda. And of course, Rwanda's growth rates are starting to normalize now.
Yep.
We've seen a 7, 8, 9%. It's now starting to go to a 7, 6%, where we do feel it's going to be sustainable. We were there for the World Economic Forum. It was a fantastic city to be in. There's a lot of interesting projects that they are busy with. For instance, taking drones into the rural areas to deliver medicine, etc. And again, one of the easiest business environments in Africa. However, we must also be realistic. It is a very small geographic country. It is landlocked and it's got no resources. Thank goodness they have the vision to open up their economy so vastly that it is so easy to invest in there. And then, of course, as Nima has explained, with the East African community, they are part of it. So what stops a company to headquarter themselves in Rwanda, which will be very easy to do? The government will open their arms very wide and then do trading with the rest of East African community. So I think Rwanda is setting itself up to be maybe a little trade hub, a financial hub, and a services hub in the future.
Africa, Singapore, let's leave it there.
Yes.
Thanks to my guests, Nima Ramkhelawan-Bhana and Celeste Fokonia, Africa analyst at Rand Merchant Bank. That's all from the special edition of Buy Africa this week. Remember to follow me on Twitter, that's @Mudiba_Tsepo, and send us your thoughts about the show using the hashtag Buy Africa. From myself and the team, goodbye.